today's episode of the Habitz Podcast, we've got Sam Fox from the Warrington Mortgage Centre, who's going to be sharing with us his good tips when it comes to applying for your mortgage. So thanks for joining us, Sam. There'll be some people wondering what qualifies you to be our expert when it comes to applying for mortgages.
Yeah, cheers, Mike. It's a pleasure to be here. So I've been in mortgages now for about 6-7 years in some capacity, long generations of family members being involved, so grown up with kind of the industry being around me. About 3 years ago, we wanted to create an identity within our local town and help deliver exceptional service to first-time buyers and families navigate through an increasingly difficult mortgage market, and we service over 50 applications per month. So for us, really, we know the answers to the questions even before you're going to think about them.
So you're dealing with around 600 mortgage applications per year with multiple providers?
Yep, thereabouts.
So I guess then, dealing with that many applications and that many mortgage providers, you've seen some of the things that can go horribly wrong when people do apply, or some of the bad practices that people applying for mortgages do you follow?
Yeah, absolutely. I mean, we probably learned the hard way. One of the most frustrating things is when somebody's employed and they say, I'm on 20, 30 grand a year, and they don't know. Like, you should be proud of what you earn. We've had solicitors in before and lawyers who say, we're on 60, 70 grand a year and this is great. So we'd start doing the mortgage figures and the calculations, say this is what you can borrow, before kind of verifying by seeing a pay slip. And they'll send the pay slip, and that's 60, 70 grand net. It's not gross, where lenders will work off the gross figures. So it's really frustrating when people don't kind of appreciate what they earn. They just kind of brush it off. And if someone's earning 100 grand a year or 30 grand a year, they should be like proud of what they earn and not looking at the net figures. So people get caught up and say to us, I can't lend enough from a mortgage application. I've been online and done a calculator. But they're always using the net figures, where a lender would always use the gross figures, which maximise what you can borrow and actually can get you into the dream home a lot quicker than what you can think. So kind of following on from there, the other frustration that we see is people don't understand what they're paying out on. Now, one of the biggest things that really, really catch people out, and we've done a video about this, is what I like to call a ghost payment, which is usually a deduction from your pay slip of a student loan or a loan from a credit union, that when you submit an application to a lender, I'm on 30 grand a year, here's my expenses. As soon as an underwriter looks at that and they see a £137 student loan, kicks it out of affordability, the mortgage application gets declined, and then people run around like a headless chicken and start complaining that they can't afford the mortgage. But if you, going back to the previous point, if you took the time to understand and bother to look at what your income's made up of and what someone's going to see about you on paper, then it just makes the process so much easier to navigate through.
So really then you'd say understanding your figures is both what you've got incomings but also outgoings as well?
Yeah, absolutely.
I've recently had a mortgage application for a property I was looking to buy, and it was declined based on car payments. And they were trying to recommend that I paid a lump sum towards the car payments to bring the monthly payments down, which was mad. You ever seen that before? Yeah,
but people can say, or lenders can request that the debt to income ratios are a bit too high. If your payments or your credit card balances were a little bit less, they can reconsider the application. So they can do it. And what the good thing there is, our lenders looking to lend, they're not kind of saying, let's throw this one in the bin, it doesn't fit. They're saying, well, if we make a few changes, we can still offer you this mortgage. But obviously not a lot of people are in that position where they can say, I'll throw 10 grand off a car loan, because people don't have that sort of money lying around at the moment. So the next thing will probably be unrealistic expectations. So we see far too many times where somebody will come and speak to us and they'll say, there's a rate here with Nationwide at 1.99, get me that rate. But they'll never fit their affordability. Nationwide might not lend on that type of property. And just because the mates had a mortgage on Nationwide doesn't automatically guarantee that the mortgage is going to go through. So we'll do an assessment with clients and make sure they're getting the most from the money and the most competitive interest rates. But then when we submit the application and we say to them, right, it's going to be 3 days before anyone looks at this case, the next morning they're ringing up saying, have you had any updates yet? Yeah. We've told you it's 3 days, and now the whole house buying process can be 12, 16, 20 weeks in some cases. But that's why we're here to guide you and manage you and say, okay, well, look, it's going to be 3 days. Don't panic. Don't worry about anything. We'll get in touch as soon as you hear anything. So the frustrating thing is that people come with an unrealistic expectation because people are telling them what they should be expecting, or they've had this experience. But every house purchase or mortgage application is completely different. There's no sort of one rule fits all.
Yeah. So if there's anyone watching this now and they're considering applying for a mortgage, or they're thinking of getting a mortgage for the first time or moving house, what sort of top tips on good habits would you share with them so they are mortgage ready?
Yeah, so I would absolutely understand what my income is versus my outgoings. So if I was employed, I'd get my latest 3 to 6 months pay slips. I'd look at my basic salary to make sure that they're all the same. If there's any overtime, commission payments, bonus payments, anything like that, I'd average them out across the year and have those figures ready. I also look at any post-tax deductions like student loans or credit union loans that might appear and have a breakdown of expenses so that when you go and see somebody and they say, how much do you spend on your utility bill or how much do you spend on student loans, you know exactly what everything is. So you're going to get a true reflection of what you can borrow the first time round rather than having a poor experience of, oh, well, it doesn't match up because I've not told them all the right information. It just provides you who's going to buy a home or remortgage with a lot more clarity and relieve that stress throughout the process.
So I suppose then by knowing your figures, you're making it easier for yourself to understand roughly what you could get a mortgage for. But then equally, it will make the process slightly quicker.
Yeah. Good habit number 2 would be just chill out. Buying a house is the most stressful time that I can think of. When I bought my first home, it was full of stress. Even helping people buy homes is stressful. But understanding the mortgage application and the process, which, you know, whoever you're dealing with, the bank would go through, or if you're working with a mortgage advisor, they'd tell you, trust the process is what I'd say. Because if you don't and you start, you know, texting the vendor that you're buying the house off and you're speaking to your solicitor and they're saying this and they're saying that, it just causes complete chaos to the point where you'll have such a bad experience, you'll never want to do it again.
Yeah. That's quite a one I see regular is where, you know, because they put the offer in the house, they probably exchange numbers as well, and they'll speak to each other when it's the 2 solicitors and the 2 mortgage companies that are sorting stuff out sometimes.
Yeah, there's been times that I've been at like a family function and I've had both parties texting me saying all kinds of black and blue words because they've said this and they've said that and the solicitor have said this, and I'm sat there at 11 o'clock at family do thinking, what is going on? You shouldn't be talking to each other at all. So yeah, just trust in the process and have that one line of communication, which, you know, hopefully would be us as your mortgage broker, and we'll just keep you informed every step of the way from whatever you need to know.
And what about finding a mortgage? So I know if I'm an end user, I might go on a mortgage comparison site. What would you recommend for people that were going to use those sites?
There's absolutely nothing wrong with trying to find mortgage rates and what your payments might be, but the downside to that is you might stumble upon a product that is not accessible to you and you've got your heart set on it. We had a great example actually a few weeks back where someone rang us up, first time buyer, I found a mortgage, can you get me that mortgage? And we said, yeah, that's fine. Do you live in Cumberland? And they went, no. Why? I said, well, you're using Cumberland Building Society and they're on that product that you've asked me to get you is only if you're buying a house there. Oh no, but you know, I can get that rate online. So people, again, going back to before about unrealistic expectations, that it is daunting to try and find this and navigate on yourself, and you can find a lot of information out there. But if you are uncomfortable with making that final step of saying, right, I'm going to make that application, then you probably do need to speak to a broker. And the kind of things that the broker can help you with is not only finding you the best interest rates, making sure that your affordability fits and, you know, you're looking really good in the eyes of a lender, but they also become a friend, so they can, when you're feeling stressed and down about the application, they can keep, you know, build you back up again. They can work with your solicitors, they can put in the 1.5 hour phone calls and sit on hold whilst they're trying to find out where the surveys are up to whilst you're at work doing, you know, your own tasks. So using a broker really kind of alleviates all of that pressure and all that additional work that you would have to do on your own. And then by the time you get to the end of the process, you've seen a broker, they've done your application, next thing you know, you're getting your keys. So, you know, that's kind of where a mortgage advisor would come in and help with that process.
So where could people find you if they were considering remortgaging the property or getting a mortgage for the first time?
So they can find us across all the social media platforms, or they can go to warringtonmortgagecentre.co.uk, fill out our little inquiry form, and we'll get in touch with them.
So thanks to Sam from the Warrington Mortgage Centre for joining us in the Habitz podcast and sharing with us his good habits when it comes to applying for mortgages. If you've got any tips you'd like to share, let us know in the usual places and join us next time for some more Habitz Podcast.